Hello, I'm Molly Boesel, and today I'm sharing highlights from the CoreLogic Annual Mortgage Fraud Report for 2020. Over the past 2 years, mortgage fraud risk has been on the decline. It decreased 11% in 2019 and another 26% in 2020. The main driver of the lower risk is rate term refinances. These transactions have a lower fraud risk because there are fewer parties involved, they have minimal documentation, and no new funds are advanced. As interest rates have decreased, refis have become a much larger share of lending activity, which decreases overall fraud risk. While the record high level of refis has lowered overall fraud risk on purchases has trended up by 6% over the past year. Investment purchases are the main reason for this increase. We estimate about 1 in 164 of all loan applications has some indications of fraud. If we look at purchases, that estimate increases to 1 in 126. It becomes a more concerning 1 in 28 if we only look at investment purchases. Investors often purchase multiple properties, are savvy to the lending process, and have a profit motive. The fraud risk is greater and it looks different than fraud on owner-occupied homes. Hidden concurrent purchases spread between lenders is one common tactic. Another is adding relatives to contracts to claim owner occupancy. Since 2013, a growing share of 1 to 4 unit investment properties are purchased by someone who lives in another state. That's increased from 17% to 23% in the last 7 years. Investors from high-cost areas such as California, Washington, and New York are buying homes in the middle of the country where they're more affordable. We measure 6 fraud categories on a macro level. While most were down year over year, occupancy fraud risk was up 26%. This indicates investment activity that is hidden from lenders. We expect to see fraud risk begin to edge up in 2021 as the swell of refis slows and purchase loans take up much more of the overall loan mix. One thing to watch very closely is delinquencies. If there's a surge in distressed homes, the fraud landscape could change quickly. Foreclosure rescues, short sale fraud, false valuations, and straw buyers are the risks that will become more of a concern. For more information, please visit CoreLogic.com and search for Mortgage Fraud Report. Thanks for watching.